Good evening, guys. Welcome to my YouTube channel. My name is Mtrades. You can also call me Dimeji. And this is the first part of a 3-series video I want to share with you guys relating to the financial markets. It's a beginner's level video where, the surface level video where you can, if you are just coming into the space for the first time, you can easily understand. So I'll be giving you and I'll be explaining the important things you need to know. No long talks. So get a pen, get a jotter, and let me take you on a little journey. Let's flow. Right? Okay. So straight to the point. So what is Forex? What is Forex? What is Forex? All right, so I'll be using this particular board here as well. So let me just say Forex 101. Hey, we're back in school. All right, so the word Forex was coined from foreign exchange. It's as simple as that. The word Forex was coined from the word foreign exchange. So let me quickly make an analogy here, right? Okay, I'm currently shooting this video. My current location is Lagos, Nigeria. So let's say I want to take a quick trip, or I want to go for vacation, or I want to, whatever it is, I just want to take a trip outside Nigeria, outside Lagos. Let's say, okay, I'm heading to France, right? I want to go to France for whatever reason. Now, I have my own local currency here. I have my Naira that I spend. When I get to the airport there in France, I can't spend my Naira there. I have to convert my local currency to their own currency so I can be able to spend my money, right? That particular thing I'm doing at the airport, or that particular thing I'm doing at their at where they exchange those currencies, is basically you carrying out foreign exchange. It's the same thing if I'm moving from here to a West African country or another East African country. When I get there, I have to convert my Naira. Let's say I'm going to Kenya. When I get there, I have to convert my Naira to shillings, which is their currency. That particular thing I did is basically me carrying out foreign exchange. That is Forex. So that is the simple surface level explanation. You don't need too much grammar on it. That is basically it. So, and in Forex, what do Forex traders, what do they trade, right? What do we do in Forex? So first off, I'm going to tell you the markets we have. Here we have the Forex markets. We have the crypto markets. We have the commodities markets. We have the stocks. Yeah, people also trade stocks. We have the futures trading. Right, am I okay? Yeah, we also have energy, yeah. So these are basically the things we trade, the markets we trade. These are the markets we trade. I'll give you example here. So under Forex markets, traders trade currency pairs. They trade currency pairs. Example of a currency pair is euro, pounds, Short form of pounds is GBP. CAD is Canadian dollar. So this is the short form. CAD is Canadian dollar. We have AUD, which is Australian dollar. We have the dollar itself. We have Japanese yen. The short form is JPY. Just name it, whatever currency you can think of is tradable. Even Naira, Indian rupees. So whatever currency you can think of can be traded on the Forex market. Now, I just made an analogy now that I said if I travel to France, I have to change my local currency to their own currency. That I have to change my Naira to Euro, right? Now, what we do as traders, what Forex traders do, or what analysts, what traders do, we don't necessarily need to be in those countries to profit or to carry out that particular foreign exchange. I don't necessarily need to be in Europe. I don't need to be in Canada. I don't need to be in Australia. I don't need to be in Japan. I don't need to be in these countries for me to still carry out my foreign exchange. What we do as traders, we do what we call speculative analysis. Speculative analysis means we are speculating the price difference. You know, when I get to those places, I'm using France for instance, now when I get to France and I tender my local currency that, okay, this is how much I want to convert. This is how much I have with me at the moment. They would quote me with the current price of euro as at that time that, oh, okay, for you to get so euro, this is how much you are going to bring in your own currency. So that particular thing we're doing, that particular thing is foreign exchange. So, but what we do I need a good laptop, I need a phone and a stable internet. Some people don't even trade with laptops, just your phone and your internet is okay. You can still carry out that foreign exchange. Once you understand how to analyze the market, once you understand technical analysis, we have two types of analysis. We have technical analysis and fundamental analysis. Let me just put that one here. So, technical analysis and fundamental analysis. So, quickly on these two, technical analysis is when you are looking at the charts. You are looking at it to understand the price movements and all of those things, to do your analysis on it. Fundamental analysis is when you are looking outside the charts. You are looking at what is going on around the world. Like, for instance, earlier this year, around February, we had USA and Iran going at it. I'm sure you would have seen the news probably on Twitter on X. I think that's what it's called now. On X, on Instagram, Facebook, you would see, oh, USA is shooting this one, Iran is bombing this one and stuff like that. So when you are making decisions based on what is happening around the world, that is basically fundamental analysis. While technical analysis, you are looking at the charts to tell you where price wants to move. Now, back to the Forex market here. On Forex market, we trade currencies such as euro, pounds, CAD, AUD, dollar, JPY. You can name all the currencies. Now, we also have our crypto market here. Under crypto market, traders trade Bitcoin. That's the short BTC, Bitcoin. We have Ethereum, ETH. Traders trade LTC, Litecoin. They trade Doge, this Elon Musk coin that he created one time like that. So ETC, there are lots of them that is tradable on the crypto market. On the commodities market, traders tend to trade they tend to trade gold. They tend to trade silver. They tend to trade copper. They tend to trade iron ore. They tend to trade there are many of them. on stocks market, traders tend to invest in stocks as well, right? Example of stocks, we have Tesla, we have Amazon, there is Google, Nvidia, many of them like that. Now, you don't necessarily need to, or you don't say, oh, because there is Forex, so there's crypto market, commodities market, stocks, I can't know all these ones, I can't trade all of these things. You don't necessarily need to know everything. Me, myself, I focus on the Forex market, which is I trade currency pairs. I'm very good at trading currency pairs, and that is where my focus is on. Now, I trade currency pairs, I trade crypto as well, but it's just BTC I trade. I don't trade the rest of the guys in crypto, because this Bitcoin is like, it moves every other coins, crypto coins. So I focus on trading just BTC. When BTC pumps means when it goes up. Dumps means when it goes down. So when BTC goes up, the rest usually follows. When BTC dumps, the rest usually. So I just prefer to just trade only BTC. I just focus on it. Commodities market, I trade just gold. I don't trade the rest of these guys. I don't trade stocks at all. I don't invest in stocks. Then there's futures trading. I don't trade this guy as well. Then energy, we have oil. It's not like I can't trade direct. I can't trade all of these guys, but it's better if you specialize, because the funny thing about all of these things is the charts is similar. Once you know how to trade currencies, you can trade crypto. Once you know how to trade crypto, you can trade. Sure, you understand? It's the same technical analysis you will do. So you just have to specialize in. Don't let me stress myself too much. Let me just pick this one and trade this one and stuff like that. You get, it's the same technical analysis. So these are the things we trade on the markets, right? Like I said. So moving on. So what is Forex? We've talked about what Forex is. We said it's the word Forex was coined from foreign exchange. Now, what you need to know also is the Forex market is the largest financial market in the world. The volume of transaction every single day is worth $7 trillion. Quote me anywhere. Every day, the transaction carried out on the Forex market, $7 trillion. And it's the truth, because people travel every single day. People move from Australia to Thailand. People move from New Zealand to China. People move from South Korea down to Africa. People move from Africa to Europe. People move from Europe to Canada every single day. And people are exchanging currencies. They are carrying out Forex. They are carrying out foreign exchange. So it's the most liquid market in the world. Right? So moving on. And the Forex market opens 24 hours a day, 5 days a week. So it runs from Monday to Friday. Like we said, it opens 24/5, not 24/7, 24/5. So basically, the market actually opens on Sunday nights. Now, I'll be referencing my own local time here, my own Nigerian time. I'm currently in Nigeria, so I'll be referencing my own local time here, right? So it opens Sunday, 10 p.m. West African time, and the market runs from Sunday till Friday, closes the same time, 10 p.m. West African time. When does the market opens? Okay, so this is the time from Sunday night, 10 p.m. West African. Oh, sorry. There is a typo here. West African time, and runs to Friday, 10 p.m. West African time. Now, it opens on Sunday night, but the market becomes active on Monday morning. Right? It becomes active, very active on Monday morning till Friday evening. That is why they said it's 24/5. So moving on. So yeah, with the one currency is bought while another is sold. So we do speculative analysis on currencies. We trade the euro against the pounds, the Australia against the Japanese yen, the dollar against the pounds against Australian dollar. That is what the Forex is all about. The Forex market is all about. You speculate on the prices of those currencies, how strong or weak this one is. That is basically it. Who are the major participants and what do they do? The major participants in the market, these are the major guys that moves the market. Now, remember we said the volume of transactions carried out every single day is worth $7 trillion. Now, imagine I have $10 to deposit to try to trade with $10. My $10 cannot move anything in a market that runs $7 trillion volume every single day. What can my $10 or $100 do? What can my $50 do? What can my $1,000 do? Even my $10,000 can't do anything, right? So the major participants are the central banks. The central banks are the top dogs in the industry, like the top echelon. So basically, what do? They set interest rates. Let me quickly explain this to you. Interest rates. All right, so you are an investor, right? I mean, you for you to sit down want to watch this video, it means you're already pitching yourself, you're already pushing yourself towards that angle, right? So you're an investor, you have a certain amount, you want to invest in a country's economy, right? The current interest rate in the United States is 3.75% for USA, and the current interest rates in Japan is 0.75%. Now, you're an investor, you want to invest in one of these countries' economy. Logically, like, think, like, where do you think is your money is going to yield higher, yield better? Of course, it's US's economy, because this is what they are offering you. If you bring one, you'll be getting 3.75% on it. If you bring 100, you'll be getting this. If you bring 1,000, you'll be getting this, compared to Japan. So the function of these central banks is they set interest rates. They tell you, okay, our economy is doing good. This is our interest rates. As an investor, do you want to come and invest with us? If you invest with us, you are getting 3.75% returns. So they set interest rates. And interest rates is what the financial market looks at, that creates those price moves, that creates the liquidity in the markets. Liquidity means money. And we talk about liquidity. So, you see, some people will tell you that, I'm not liquid enough. Means I don't have much cash. Liquidity means money. So when you hear, I got liquidated, it means you lost money. I'm not liquid, I don't have enough. So liquidity, when you see traders refer to, I got liquidated, or I'm liquid, or I'm not liquid, it means they're talking about money. So we use that instead of mentioning money. We just say liquidity. The liquidity is not enough in the market. The money is not enough in the market. There's excess liquidity in the market. There's excess money in the market. Right? Moving on. So central banks, they set interest rates. They control inflation. What is inflation? Inflation is basically the prices of goods and services in the economy, how high or low it is. The funny thing about all of these things is I'm not even an economics student. My discipline is far from it. But I had to build the knowledge and understand some of these things. Now, it could be boring to you at first, because I'm not showing you the chart. I'm not showing you anything. Yeah, it's just like when you're in school, you have to first understand the theory before you start doing practicals, right? So that is what we're doing. So they control inflation. They also influence their currency value. So central banks also have the power to weaken their economy or to strengthen their economy. There's a way they do it. They use interest rates to do this particular thing. They use interest rates to weaken their economy or to strengthen their economy. What are the examples of central banks? We have the Federal Reserve. This Federal Reserve, these guys are in the United States. That's the body, the committee that sets the interest rate and control inflation and do all of these things. Federal Reserve, they're in the United States. This is ECB. ECB stands for European Central Bank. These guys are in Europe. It's also a committee. Europe, we have many countries in Europe. We have Spain, we have Germany, we have Italy, we have France, Norway, Belgium, Netherlands. All of these countries are in Europe. So we have ECB. There is a body that is controlling the same set interest rates, controlling inflation, influencing their currency value for Europeans in Europe. Now we have Bank of England. These ones are in the UK. They are doing the same thing, the same functions, right? We have Bank of Australia. We have Bank of New Zealand, Bank of Japan, like that. So those guys are the people that actually move the markets. They have large liquidity, right? Moving on. Institutions. What do institutions do? They manage large amounts of money. They provide liquidity. Remember what liquidity means? Liquidity means money. They invest for clients. Examples of these institutions are, if you've seen this movie, Wolf of Wall Street, or if you've watched Billions, or if you've watched Succession, these are financial market movies that you can see them. Institutions, we have examples like Goldman Sachs, we have JP Morgan. These are top institutions that provide large liquidity. They can help you invest. Now, I'm not talking about you investing $100. I'm talking about for the top guys, not even with my own top guys. I'm talking about Elon Musk kind of investment. So institutions tend to invest for very rich clients and all of those things here. So examples are banks, asset managers, pension funds, etc. Hedge funds are professional traders, right? They are also participants. They take large positions on the markets. They profit from the market movements and they focus on returns. So these guys tend to also control large amounts. They are the ones that inject like $1 million, $10 million, $50 million, $25 million into the market, to provide more liquidity. They also want to profit from the market. The central banks, these ones are not really they are not interested in making money from that financial market. Their own is just to set interest rates, control this guy, influence their currency and all of these things. Institutions try to manage investors' funds, right, and provide liquidity. These guys, the hedge fund guys, you see some traders, you see them, you see all those Wall Street movies where you see a lot of like a trading pit. You see so many guys in front of their system. Those are hedge fund guys, right? So these guys are trying to profit from the movement on the market. And there's retail traders. They are the minute people on the market. Like they are the prey. Am I right? Yeah. Yeah. Like they are below the food chain. Retail traders are you. Retail traders are me. Because how much do we have? Your $10, your $50, your $25, your $1,000, your $10,000, your $50,000 cannot move the market. A market that the volume is $7 trillion traded every single day. So you and I, our liquidity, our money, can't move the market. So we are retail traders. Why? Right? We are individual traders. We trade through brokers. What are brokers? Brokers are third-party platform. Brokers are like platform where you register with, then you deposit your money into it, your $10, your $20, your $100, you deposit your money into it, then you try to trade it to make money for yourself. So brokers provide you that platform. They connect you to the live market. Because you can't just put your money, you can't just carry your money now, just go and point inside. You don't know where you're going to, right? So you need a platform, you need broker. So those brokers will verify you, then you put your small money there, then you trade it to make more money, right? So retail traders use personal capital. Retail trader is you, and retail trader is what? Is me. I'm also a retail trader. Anybody that is trading below $10 million. Don't worry, the person is a retail trader. How many people has $10 million holding somewhere? Not many, right? Yeah. So moving on. So what do we trade? We've talked about this. We trade currencies, price move based on interest rates, economic news, inflation, supply and demand. So I don't want to bore you with so many macros and all of these things. So the major things you should know is price move based on interest rate. Who are the people that set interest rate? These guys, central banks, right? Economic news are news that's, like news coming out. Oh, Trump has said so thing, and this is data is going to news is coming out in United States. There's a website we check all of these things just to stay updated, right? Inflation. Who controls inflation? Central banks. Supply and demand. So these are the things that majorly move currency pairs in the market, that moves the market. Now, moving on. What are the market hours and sessions? Remember, over here, we said the market opens from Sunday night 10 p.m. and it runs till Friday 10 p.m., right? How didn't I just change this? Sorry. This should be West African time. All right. Trading sessions. Right. So we have three major sessions. We have the Asian session. We have the London session, and lastly we have the New York session. Right, so these are the major trading sessions we have. Now, the Asian session runs from, remember I'm referencing my own local time here in Nigeria. The Asian session runs from 1 a.m. West African time till 6 a.m. West African time. The London session runs from 8 a.m. West African time till 1 p.m. West African time. The New York session runs from 2 p.m. West African time to 7 p.m. West African time. So basically, let me quickly break this down. So we have three major trading sessions. So Asia session, now like I said, I'm in Lagos, Nigeria now, right? The market opens Sunday evening from 10 p.m. but it becomes active on Monday morning. Between when it is Asian session 1 a.m., the currency pairs that tend to move better are those countries in Asia. I'm talking about those countries near Asia like Australia, New Zealand, Japan, China, those places, because they are like 6 hours ahead of my own local time here. If I am in 1 a.m. yeah, they are already like 6:30 in the morning. They are already active. They are already trading. Their own financial market is open. The trading this thing is already open, active for them, right? So 1 a.m. to 6 a.m. my local time here is when Asia session is usually active. So the currency pairs that move let me just put this here. AUD, like Australian dollar that we mentioned. New Zealand dollar tends to move in Asia session. In Asia session, we have the yen, the Japanese yen, Japan's currency. It tends to move there. We also have the Chinese yuan, right? So these guys tend to move better in Asia session. Why? Because they are already awake. They are already active. It is already morning at their side. So they are already trading, trying to make money, trying to make profits, while the rest of the world is sleeping. Remember, Africa and Europe, our time zone is very, 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 very similar. right? So the rest of the world is sleeping. Asia traders, Asia investors, they are all awake. They are already active because they are 6 hours ahead of the rest of the world, in it, especially that part of the world there. So these are the guys that moves better in Asian session. Now for London session starts from 8 o'clock West African time to 1 p.m. Now the currency pairs that moves better in London sessions are euro, pounds, the dollar, the Swiss franc. Swiss franc is Switzerland's currency. You know, we said we can trade all currencies. So Switzerland also is in Europe. The short form of Swiss franc is CHF. Tends to move there as well. Funny enough, these guys that move well in Asia tends to also move in London. In fact, you can put everything there, right? So in London session, these guys tends to move better. There is more liquidity in the market because now London guys are awake. Like the people in Europe, they are awake also. They want to trade. It doesn't mean when we say London session, it doesn't mean that it's only people in London that can trade. Though. London session means people in Europe are active also to trade. So there is more hands on deck. There are more investors. There is liquidity in the market. People are injecting money into it. Right? There's also what we call volatility. Volatility simply means the movement of price. Let me put this here. Volatility means how price moves. Right. So in London session, we have more volatility. Like the prices are moving very fast. They are faster in London session than Asian session. Why? Because in Asian session, is just very few people are trading. Like it's mostly people in Asia that are trading. People in London, people in New York, most of them are asleep. Right? Asia session traders are active. They are actively investing money in the market and stuff. So when it gets to London, when it gets to 8 a.m. here, these guys would already be in the evening. Asian guys, the people in Asia, they will already be in the evening. By that time, their financial market is slowing down and almost closing. Now, some of them can still decide to trade London session. It's why the market moves better in London session than Asian session. Now, it doesn't mean that, hey, I'm not going to sleep. How am I going to sleep? Or how do I want to be trading Asian London? You can specialize. When I started trading, I started with Asia session as well. But with time, I developed, right? I just neglected Asian session. Right, so you don't necessarily need to be awake 1 a.m. to 6 a.m. Oh, 8 a.m. I have to be awake and be monitoring the chart, monitoring the market. No, you don't have to do that. It depends on your schedule, how comfortable you are, how convenient it is. Some traders will tell you that I don't have time, or I don't have time during the day. I like to be awake at night. I'm a night owl, right? And they will be awake for Asian session to trade with the Asian guys. They will be active. Some don't really have time. They just want to sleep in the middle of the night. And during the day, they are very active. They will prefer to trade in the morning. Oh, let me just focus on London session, right? So the New York session, just pack all of these guys together. That is, the New York session is the number one session, is the peak. That is when everybody's hands are on deck. There's liquidity, there's volatility. It is faster than London session. It's faster than Asian session. Why? Why is it faster? Because that is when the major events in the world, that is when you start seeing news coming out from the major places in the world. News will come out from USA, news will come out from UK, news will come out. It's always during New York session. That is why most traders prefer to focus on New York session. If you are looking for fast movements, you just want to quickly make profit and leave the market, you don't have time to be sitting around, just come to New York session. All of these guys you're seeing here, all of them moves in New York session, right? So New York session is the top trading session we have, that we trade. Sure, you understand? So moving on. So yeah, the Forex market and hours. Sydney session, this one is Australian session, but it's not. Just focus on Tokyo. Tokyo is Asia. London session, you can see it here. Asian market is active in Tokyo, which is Japan. right, which is also Asian session. That's what it's called. Then London session, you can see high liquidity and volatility, which means high money. Money has been injected into the market, and volatility, which means price movement has been injected also, right? Then New York session, major news and momentum, right? So moving on, the dollar is king. The dollar is the world's reserve currency. It's used in international trade. It is priced in oil. It is backed by the world's largest economy. That's just the honest truth. The United States has the biggest economy in the world. Now, why them they proud sometimes? So that is why they have the largest economy, the largest, biggest, richest people are there, and so they have the biggest economy. Now, the funny thing is, the pounds is the what do I call it now? The highest currency. The pounds is very, very expensive. It's the highest currency, but it is not the strongest. The dollar is king. Right? Like recently when I went on a trip, I went to another East African country. On getting there, I gave them my local currency and they rejected it. They told me if I have dollar, I should give it to them and I'm good. And that was just it. So if you have dollar, if you're going anywhere, you're safe because the dollar is the reserved currency, right? So these are the common USD pairs: Euro USD, Pounds USD, USD JPY, AUD USD. You see, we are always, this is our currency pairs. We are always quoting one against the other. We are always pitting them together to trade, right? So 80 to 90% of Forex transactions involve the US dollar. That is why it's the number one reserve currency. Everything you want to do in terms of international standard, the dollar is king, right? Moving on. So examples of currency traded: base and quote currency. So here you can see Euro USD like we saw here, right? Euro, whichever one you see first is the base currency. Just understand that base currency and quote currency, whichever one you see first is the base currency. The second one is the quote currency. It means for you to get, you are quoting this second one against this first one. What does it mean? Let me make another example, another analogy here. So see this euro as the father, dollar as the son. I know what is coming through your mind. There's no Holy Ghost here. Just see euro as the father, dollar as the son. Now, for you to get 1 euro, you are quoting dollar against euro. So let me quickly show you trading view. Yeah, before we move, the tools you need to download, you don't need so much. Just go to your Play Store, download trading view and MT5, not all, and MetaTrader 5. Just search MetaTrader 5. There's MetaTrader 4, there's 5. You can just, so trading view is basically used for analysis. This is where we analyze the markets. I want to see what gold is saying today. I want to see what crypto is saying. I want to see what Bitcoin is saying. This is where we do our analysis on trading view. And MetaTrader 5 is only for execution of trades. Once you've, we talked about a broker earlier, saying a broker is a third-party platform, right? So that particular broker is going to give you a login. They'll give you an account. They'll give you the a login ID for you to log in into your MetaTrader 5 once you register with the broker, right? So you can trade your money. So this MetaTrader 5 is for execution of trades. So why trading view is fun. So just go to your go to your Play Store, App Store, download trading view and download MetaTrader. These are just, it's free. The platforms are free. None of them is paid for, right? So it's free. So these are the two major ones you need to start. Now, this is my trading view here. So you can see these are the currency pairs we trade. Now, once you open your trading view account and you've signed in through your Google, or you've signed in, done all of those things, you've registered, you verified it and stuff like that, then this is most likely how it's going to look like. At this top corner here, you can see search all stocks, funds, futures, forex, crypto, indices, bonds, economy. all of these things. This is where you're coming to Forex. When you click Forex, you would see all of these things: Euro USD, Pounds USD. These are currency pair: USD JPY, AUD. You can see all of this, the GBP JPY. So these ones here are they are let me say liquidity provider. You know what liquidity means? Money. Like they are showing you the live market, they are showing you the price charts, they are providing you the live feeds of these particular things you want to trade. So the live source I use, the feed I use amongst all of these guys, because we have Oanda, Forex.com, FXCM. You can see all of them, there are many, but I use Oanda. So you understand? So I come here, all sources, I look for Oanda. Where is Oanda? Yeah, this is Oanda. I just click Oanda. So it's reduces sorry, removes the rest for me and just puts me here, right? So this is Euro USD. So this is Euro USD, GBP USD, AUD USD, and the likes. What is wrong with my internet? So yeah, so this is how this is how currency looks like. You can see Euro USD, GBP, AUD, NZ USD. So I don't know what's wrong with this internet, but moving on. So we said here, base currency and what, and quote currency. Whatever you see first is the base. Whatever you see second is the quote. So you are quoting this USD against the euro. Let's say the current price of Euro USD is 1.1 thousand. You are saying for you to get 1 euro, you have to go and bring 1.1 thousand of dollars. You have to present USD, 1.1 thousand of USD before you can get 1 euro. This is it. This means 1 euro is equals to 1.10 US dollars. So basically conversion, right? So the first currency in the pair is the base. The second currency in the pair is the quote. If Euro USD rises, if it rises, euro strengthens against the dollar. It means if you are looking at the chart of Euro USD and Euro USD goes up, it's called, oh, the market is going up. It means the market is bullish. Bullish means when something is going up. Let me put this here. Bullish. Bullish is when prices are rising. Bearish is when prices are falling. So you can put this down as well. So when we say, oh, that market is bullish, oh, that market is too bullish, it means the prices are rising rapidly, they are rising fast. When if we say the market is bearish, it means the prices are falling, the market is falling, right? So yeah, when we say Euro USD is bullish, it means if Euro USD is moving up, it means that euro is gaining strength against the dollar. When we say Euro USD is falling, when we say Euro USD is bearish, it means the dollar is gaining strength against the euro. So the first currency is the base currency. The second currency in the pair is the quote currency. So this is the base, this is the quote. Just like here, this is the base. The pounds is the base, dollar is the quote. It means for you to get £1, you have to go and bring about, you look at the live chart of pounds, dollar. You look at it on TradingView. USD. And funny thing is, this particular thing I'm saying, this thing I'm explaining is what is happening around. If you travel now, if you move from here to, if you go from here to the UK, right, you get there, you want to change your dollar, you want to change your currency, that is the price they're going to quote you, the live feed. If you go to banks, most of these banks that you guys put your money into and stuff, oh, I'm saving money in UBA Bank, I'm saving money in Zenith, I'm saving money with Access. What do you think those guys, these banks, what do you think they use your money to do? They use your money to trade. You see some guys in their offices upstairs somewhere that is restricted to you as an outsider, as a customer. These banks use your money to trade the Forex market, to invest in stocks, to profit. So they can also have their own small gains and pay their workers and stuff. Is it your money they are using to pay the work? No. You understand? So what is happening on the Forex market, what is happening outside there as well. What is happening outside there influences the Forex market as well, right? So this is the base currency, this is the quote, base quote, base quote. So you are quoting CAD against the dollar, you are quoting USD against the NZ. When you see the first one is the base, the second one is the quote, right? So this is where we are going to end the first the first session, the first part of the video. Don't forget, I'll be dropping 3. So this is the first one. In subsequent classes, we'll try and move a little bit further. I know it's boring, it's all talk and stuff, but like I said, you have to understand the theory before you jump into the practical aspect, right? So in summary, what is Forex? It's coined from the word foreign exchange. Major participants are central banks, institutions, hedge funds, and retail traders. What do we trade? Currency pairs, and all of that we mentioned. The market hours, don't forget, it runs from Monday to Friday, right? But it opens on Sunday night, 10 p.m. But it's very slow till when it gets to Asian session, 1 a.m. West African time till 6 a.m. Then Asian guys are going to step back to go and try and relax and sleep. Then London guys will take over. There will be more liquidity, more volatility. Then New York, when it comes to New York session, then you start seeing the crazy moves, right? So also the dollar is king. The dollar is the world's dominant currency. And lastly, we talked about the base and quote currency. So we'll be ending the class here. In subsequent videos, we'll try and move a little bit deeper. And yeah, if you stay to the end of the video, you've done well. Big ups, kudos to you. And I hope you've been able to get 1 or 2 things. Thank you very much for watching. Please like, please subscribe, please share with your friends. Please share with your friends, because now I will ginger me to make more videos. All right. Anyways, thank you so much for watching. Stay active, stay sharp. Bye for now.